Bawdy, welcome to the podcast, man.
Hey, how's it going?
So I like to jump into things pretty quickly. Um, so as we were just talking about off air before we started recording, I want to sort of focus on a lot of price related things, as that's often what you're known for in the Monero space, obviously doing the price report for Monero Talk. But I think also in the Monero community, people, including myself, think it's important not to focus on price. I think price is a distraction in a large sense. But on the other side of that, it's also important to be realistic and understand what price does represent, which is often, say, success in a market or adoption within a society. So let's talk about the Monero trends. Like from a long-term point of view, how is Monero faring from a TA point of view and a price point of view?
You would say probably it's faring relatively neutral. We had a really big price pump early on in its history. We've kind of we've been up, we've been down. Right now, we seem to have a pretty solid floor above 100. It seems even in the worst of price tragedies that Monero price tends to stick above 100. If we wanted to compare it to Bitcoin price, it's really one of only a few coins that's actually held its value relative to Bitcoin since launch over the course of almost a decade. So if you look at all the OG coins, they're almost all down relative to Bitcoin. The only ones that I can think of that are ahead would be Ethereum and Dogecoin. And I think there's one more that I'm missing, but it's basically ETH and Dogecoin are the only other ones that have held their price relative to Bitcoin, which is pretty remarkable given the plethora of coins that we've seen over the years. So to me, it seems like Monero is doing pretty well. If you wanted to use price as a proxy for adoption, and maybe we shouldn't really do that. I don't think necessarily that we should. It's a very, very rough proxy. I mean, come on, you have an asset that can do a 10x, a 20x, and then crash 85%. Like, is that really telling us what's happening with adoption? It is a little bit if you kind of average all that out over the long term. But, I mean, I think you're right. We shouldn't focus too heavily on price. It really just, personally, I like to segregate it. I mean, I'm kind of a price guy. I got into crypto. I wanted to understand markets. I didn't want to get left at the top again. I was in the big bull run of 2017, and I got left at the top of the market. I was like, yeah, I made it, and then I fell 85% with everyone else, and I said never again. Right? I'm not going to do that again. But the other part of it, it's like, I mean, we've seen with the maximalists, it's so easy to over focus on price. And even like myself, I have a tendency to do it. And really all of us have the tendency to do it. Over focusing on price kind of causes us to try and pair it around our price when it's good. And then to try and make excuses when it's not, when really like ideally we should be focused on usage, real world adoption, making businesses that accept Monero, that accept maybe any other cryptocurrencies that are useful for us. So that's kind of the way I would think about price and adoption and the mentality we should take about it. It's okay to be a bit of a moon boy. Just make sure to segregate it and always make sure to like self-reflect that you're not letting it get away from you. You're not getting egotistical over price.
What do you think about, for example, like most people who come into crypto generally come in for, certainly myself, you come for the money, and as the saying goes, you come for the income, but you stay for the outcome, right? So when the so-called income isn't doing a SHIB or a Doge doing 100Xs, and in general certainly it's not available in a large amount of exchanges, right? So it's been banned from a lot of exchanges. So how do you get around that, the fact that people come for price and Monero is not really attracting that price crowd, therefore it's very difficult to get them to adopt the technology and the so-called revolution, if you will?
In a lot of cases, I'm not sure that we can get around it. A lot of people are just here for the memes. They're here for the dogs. They're here for the price, and that might be hard to overcome. You're a veteran here in the Monero community, and you've seen the years that we've spent trying to talk to the people who should have been most ideologically aligned with us. The Bitcoin maximalists. And while there are a significant number of people that I just call Bitcoiners that are Monero friendly, there's a lot of them that are maximalists that are just almost totally shut out Monero. So I think in a lot of ways sure, we should have the conversations. We should try and help people understand. And a lot of times that we're having these debates with people, it's more so the case that it's not for the person that we're talking to. It's for the people that are going to be watching, right? Because a lot of people haven't made up their minds. So we should continue to have those conversations and those debates. But ultimately, I think that real world adoption and usage is what's going to win the day. When you have people that are using the product, there's an inherent demand for it. That's going to support the price on its own. Hell, it hopefully would cause us to have a more stable price, because realistically, if you want to use something as a currency, you don't want the price to do these crazy movements. These crazy vacillations actually harm adoption in the long run. I know some people have the theory that these these price swings cause people to jump into the market, but causes a lot of people to never come back to the market. That negative emotion, doesn't help. So I think it's, just kind of nose to the grindstone. We've seen so many people in the last year creating products, releasing stuff that's online. Personally, I'm trying to open up some businesses here in Mexico that we could accept Monero. Maybe if we even have another conference here, another Monerotopia, we could offer our services, our product for people for Monero. But just in general too, like I'm pretty okay with using other cryptocurrencies as needed. At the moment, Monero has so much capacity. We've got 100x. I mean, some people say 1,000x capacity on chain before we start running into problems. So, I mean, I say we should just be going with Monero as much as we can for the meantime.
So I just want to quickly talk about BTC XMR. I know you mentioned it before, but sort of how is the BTC XMR chart playing out? How do you see that from a societal point of view? Do you see people more likely or willing to adopt Bitcoin or Monero or both even?
Unfortunately, at the moment, it seems like people, I mean, Bitcoin's got the name brand recognition. You go to any country, everyone knows what Bitcoin is. Like, ask any cab driver, basically anywhere. They all know what Bitcoin is now. If you ask them what's Monero, in some Latin speaking countries, they'll like show you some coins. Moneda means coin, basically. None of them really know what Monero is. So, in terms of the chart, like in terms of how the chart looks, it's not terrible. Like I said, we've kind of basically held our own versus Bitcoin over the past 9 years, going on a decade now. I haven't found that TA necessarily works as well on Monero as you might want it to. In my mind, TA kind of tends to work with sort of larger cap and more macro assets. Nonetheless, there was this sort of sideways triangle for a long time that Monero broke to the upside. It was very difficult to break that triangle, but ultimately we did. And right now, price is being supported by this sort of rising support line, which we're kind of flirting with right now. It does seem to be the case that during bull market trends, especially large bull market trends, that Monero does lag behind. A lot of the other coins get pumped. They get a lot of price response. Monero doesn't get nearly so much, but we did see a pretty, hell, you'd almost call it miraculous. During the bear market, Monero performed twice as well as Bitcoin. In fact, Monero is one of the top performing coins for the entire bear market. And to me, that's kind of fundamental showing through. I think it's sort of a common, I don't want to say trope because that would imply it's not true, but it is like commonly known, commonly accepted. People say that bear markets tend to show fundamentals and they tend to wash out a lot of the excess and hype. So I do think that in terms of XMR BTC, the bear market did reveal our fundamentals.
One of the final things I want to talk about is something we probably should have covered earlier, which is the price attacks on Monero. So how is, let's call it the government or the institutions, how are they forcing down the price of Monero, so to say?
So I think they have a number of mechanisms. Maybe it's best if we start, I'll just kind of take you through my personal journey on this. I really started paying attention to price and trying to understand the crypto ecosystem in 2020. And I remember in the middle of 2020, after the crash, it was interesting. We kind of saw these signs where it's like, Monero's price was really flat. Everything's price was pretty flat. But we saw where Monero would never close near the top of the candle. It would never close a day near the top of the candle. And we're like, I mean, you can't really say that that's anything. It could just be chance. The big thing that we saw happen in 2020, towards the end, October, was Monero was leading the way out of the bull market. It was doing really well. That increased transaction counts, right? All of the stuff that you'd expect to see, the sort of fundamentals, the rational market hypothesis. You would have looked at everything and said, Monero really is doing what we'd expect it to do here. The thing that was weird is that on Bitfinex, we saw this massive divergence where a lot of shorts were taken against Monero, like more than we'd ever seen in its history. I tried to divide by volume as well to make sure that's like, okay, that we're not just seeing more shorts because more people are trading it, right? No, but we saw like basically when you subtract the shorts from the longs, we saw that there was massively net short Monero, even adjusted by volume. Meanwhile, Zcash had like pumped to insanely like long longs. And so you would think that's kind of weird. Monero's sort of leading the pack. Why? And at the time, people still regarded Monero, Zcash as being competitors. So why would that sort of divergence develop? Okay, whatever. We don't really know. And then we kind of saw, the explosion of crypto. Bitcoin took off. Monero sort of crashed. The TA on it didn't make a whole lot of sense either. We sort of crashed back down what was a very beautiful, lovely bottoming pattern. So that's where we started to ask questions. Okay, something seems a little bit off here. I don't want to just jump to assuming that that some nefarious hand is like crushing my number go up aspirations. But nonetheless, it still seemed like we saw these very crazy vertical spikes in Bitcoin. I started to look more and more at happening crypto, and it seemed pretty damning. Like there was quite a lot of stuff happening there. I said, okay, the potential and the propensity for fraud does exist. And then if you go back in the history of cryptocurrency, you'll actually see that there's quite a lot of fraud. And we're not just talking like buying drugs on the dark net. We're talking like price manipulation fraud. We talked about Mt. Gox earlier. That was one of the things there. So the thing that really, some of the Monero peeps picked it up faster, where they're like, hey, Binance is kind of like freezing withdrawals randomly. And we didn't really pick up on it until May of 2021 when Binance shut down so after if you remember, so Bitcoin peaked April 2021, and then the altcoins peaked a month later, and then everything crashed on like May 10th, May 11th. Well, right around there where everything crashed, Binance shut down withdrawals for 10 days, and then they diverged their prices down from Kraken, who never shut down withdrawals. They diverged their prices anywhere between 5 and 25%, depending on like the specific moment you want to look at. And so we're kind of like, wait a second, that's 10 days that they're shut down. A bunch of other people were shut down as well. Bitfinex, even though they claimed that they weren't shut down, they pegged their price to Binance and not Kraken, which is weird because if they're shut down for withdrawals on Binance, you can't really arbitrage that price difference. Like normally, okay, if the price is higher on Kraken and it's lower on Binance, then you're going to buy on Binance, withdraw, and then sell that on Kraken at a higher price. And you're going to keep doing that until the price is equalized. Well, if withdrawals are shut down, you can't do that. So it sort of trapped a lot of people in their Monero positions. They like, who wants to sell at a 10% discount, or sorry, at a 10% hit on Binance when you're looking over at Kraken and saying, hey, their price is higher. So you kind of tend to just hold through that. So it's weird to think that Binance would that they would do that. Like, what would be their reasoning for that? Meanwhile, we saw NiceHash shut down their withdrawals as well for like an entire month. So we started speculating that did NiceHash help cover for Binance's lack of Monero? What we started suspecting was that that Binance didn't actually have the Monero that they claimed that they did, which is why they had to shut down withdrawals. Because that's really bad PR. Like, I mean, that's terrible PR. But I do think that they're smart guys, and I think that they can get away with that stuff during that major crash that happened. Everyone's losing their mind about a whole bunch of stuff. So how many people from outside of the Monero community are really going to pay attention to that? Probably a lot less than if they had just done it, during normal times. So since then, we kind of saw them vacillate between allowing withdrawals, not allowing withdrawals. In terms of, just to explain more clearly how this is such a big price hit, because Binance alleges to have an order book somewhere between 50 and 80,000 Monero on their order books, much less all the extra Monero that's supposedly, held with Binance that might not be on the order books. So if you can sell a claim on something without actually buying that thing on the market, technically that would be called a naked short. And it tends to drive the price down because imagine you're an exchange and I want to buy Monero from you. And let's suppose I'm going to buy Monero and then withdraw it. You actually have to go acquire that Monero on the open market. You have to either put orders out there. You have to offer people, hey, I'll buy your Monero for this price. You're probably going to have to offer slightly higher prices than the other exchanges so that you can acquire that Monero to pay me. But if I'm not going to withdraw, and I'm not going to withdraw, well, you can sell me a claim on something that you never actually had to make a market impact on. You just made a little note in your ledger, and you're able to absorb buying pressure without allowing the price to really explode, to really go to the upside without that upside buying pressure. We have seen that the other exchanges like KuCoin and what was the other one? Big one. Doesn't matter. KuCoin and some of the other ones, Bitfinex, et cetera. We've seen these guys peg their prices. When Binance diverges down from Kraken, we see them peg their prices to Binance. We also see them shut down withdrawals sporadically ever since basically May of 2021. We saw them shut down withdrawals sporadically through the entire bear market. There was an event that happened in, it was April 18th, which is Monero's birthday, of 2022. some of the guys arranged what we call the money run. And it was, okay, we're gonna withdraw all of our coin from the exchanges, and at the same time as a liquidity test to see if these guys can meet our withdrawals. If just the small group of us, maybe it's just a few thousand of us at best, are withdrawing our Monero, right? We're like making a concerted effort to pull our Monero from these exchanges, and they can't keep their withdrawals open. That would signal that, yes, in fact, they are fractionally reserved. Yes, in fact, they have been selling Monero that that they don't actually have, because we're having to make inferences, right? We don't have like the proof, like we know this is happening 100%. Maybe there's some excuses that could be made. These corporate scumbags love to make as many excuses as they can. They ride this gray area of plausible deniability. It's a big part of how they operate. So we wanted to do this as a liquidity test to sort of like prove our conjecture, right? To prove what we think was happening. Sure enough, in the weeks leading up to the money run on April 18th, 2022, these exchanges shut down. A lot of them shut down for like the entire time. Binance was sort of like on again, off again, like kind of could maintain withdrawals, sometimes couldn't. And ultimately, I personally consider that a smoking gun. That was like our smoking gun moment. Like, okay, we tested your liquidity with just a few, like maybe a few thousand guys at best, and y'all couldn't meet that liquidity. So there's just no chance, like you guys are lying to us. You don't have the Monero you say that you do. And that is causing price performance hits on us. Now, the worst part of, maybe not the worst part, but another bad aspect of doing this is that Binance did this, and these other exchanges did this amidst a very large bull run, when we wanted to actually get, like you said earlier, they come for the number go up, they come for the NGU, and then they'll stay for the principals. And I mean, that's, there might be some problems with that, but that's just how humans are, I guess. The problem is that during one of these times that we should have had a lot of attention on the coin, we're an OG coin, we're adopted in the darknets. At the time, we were replacing Bitcoin in the darknets, and I think at this point, Monero has basically replaced Bitcoin in darknets. But we needed that social attention. And they sort of manufactured this narrative, and there's, they have kind of like their news outlets. And so we kind of just saw this attention that Monero didn't get, that it probably should have had. It's really hard to say how much buying demand was diverted from Monero via these social attacks. So we've kind of seen multiple attacks across Monero in different domains. We've seen network attacks as well. We saw attacks on GitHub. We saw there was some like pro Monero bot that was spamming up the Reddit. All this kind of happening at the same time, 2021, that was like spamming up Reddit. And so a lot of Reddits had to like block Monero comments for a while. So anyways, the last major exchange shutdown that happened was in August of 2022. It was kind of like the last pump of 2022. So we had the major crash. Bitcoin went back down below 20K finally. And then we had this kind of July and August pump in price across the board. At the very top of that pump for a period of 10 days, while everything else was kind of like making its final highs, Monero was sort of like capped flat. And then Binance and everyone shut down their withdrawals again, and we saw price divergences yet again. It wasn't nearly as bad as it was in May of 2021. My theory was that Binance had actually acquired some extra Monero ahead of time so that they could shut down their withdrawals, diverge their prices down, and then actually sell what Monero they did have on Kraken to help cap the price on Kraken as well. I don't have necessarily any proof for that. That was just kind of my intuition, my suspicion about what had happened there. But we've just repeatedly seen these shutdowns, which we don't see other coins that are shut down for withdrawals like this. We haven't seen this kind of evidence. Another thing that a guy named Monero Fox on Reddit did is he would divide the order book by the volume to see, okay, what do the order books relative to the volume look like for different coins? And he was also tracking the lending rate for Monero. So all of these exchanges, they give you a very high interest rate for lending your Monero, right? So, okay, I'll give them my Monero. They'll promise to give me 7 or 10% back. It seemed like it was usually between like 6 and 9%. So Monero was always one of the highest rates for lending. So it's kind of like, okay, it seems like every time we turned over a stone, it just looked like the exchanges were trying to find, every time we turned over a stone, it always like was in that one direction, like, okay, Monero's high. They give you a high interest rate for giving them Monero. It seemed like they were always trying to acquire Monero. It always seemed like they were dangerously fractionally reserved. And so as we just continued to amass more and more and more information, and we documented a lot of this on the XMR Trader subreddit, it just became very clear there was just, for me, there's kind of no denying that they have done this. Recently, most recently, as of 2023, they haven't been shutting down withdrawals. So I thought that was very interesting that they've actually been open for withdrawals for this latest sort of miniature bull market that we've seen. I can't really make sense of that. I've been tracking price divergences for quite a while now, and the price divergences used to kind of give you a little bit of indication of where price might be going. Interestingly, we haven't seen them shut down for withdrawals, so maybe they've cleaned up their act a little bit. What's interesting is that Monero price hasn't responded. Like if they have acquired more Monero, the price hasn't given us the kind of response that you would expect for an exchange of Binance's size being, acquiring Monero. I would like to say that that's because darknets have been under DDoS attacks. So a lot of big darknets have been shut down in the past year. So that could actually be a significant demand that's no longer there. So that's kind of like the quick and dirty, maybe the long and dirty on the reasons why we think that Monero is undergoing price attacks, and whether or not they're fractionally reserved or just fractionally reserved enough to appear to be able to meet withdrawals. I very much believe that these guys don't want a high Monero price. They didn't get it for free. There's no ASICs in Monero. There was no pre-mine. Whereas basically all the other pre-mine coins, almost every single other coin out there, either has a centralized supply via ASICs or pre-mine or something of that nature, a block reward diversion. So just in a pure financial sense, these guys they don't have the reason to promote Monero. Plus they've got chain analysis, they got asymmetric information with chain analysis, and Monero defeats that as well. So there's a lot of reasons for that, for them to want to not give Monero its due, if you will.
Let's talk about macro trends. What are some of the macro trends you're observing right now?
In Monero, crypto, or just in general?
A combination of all the three, like the intersection of the three, if you will.
Okay. So let's, like I tend to do on the price report, I like to start broad. I like to understand like the full big picture of what's happening. It seems like the United States dollar is going to slowly get used less and less. I'm not looking at a collapse of the dollar. That doesn't really seem to, I don't see any data that supports that. I don't see any really logic that supports that. Yes, the United States froze a bunch of Russian bonds, and that kind of was a signal to the world that, hey, America might not be that trustworthy in terms of, the way that they're going to handle their usage of the world's reserve currency. Nevertheless, there aren't any good currencies to replace it. There's no good fiat currency to replace it, and there's not even any good cryptocurrencies to replace the dollar, much to the chagrin of a lot of people in crypto. The capacity doesn't exist, whether it's on chain or off chain. A lot of these are still experimental protocols. There's some promise. There's a lot of promise that maybe we could get this working in the next decade. But I hate to appeal to future dev there to be like, we're going to replace the dollar because I believe in the ingenuity of developers, which will solve all the problems, just kind of like hand wavy magic. That's, it's not really congruent with the research, like the critical fundamental research, the breakthrough research that needs to happen in order for this to become a reality. So for the meantime, like the Chinese yuan, they don't want to replace the dollar as the world's reserve asset. To do so would require, sorry about that, a little bit of street noise down there. To do so would require that China open up its capital markets in a way that they don't want to. So they're a mercantilist country, which means that they rely on exports. A lot of their wealth comes from the fact that they produce a bunch of stuff and they export it. They would have to effectively open their capital markets, allow foreign investment, the kind of stuff we've seen in Canada, the United States, where foreigners come in and they put a bunch of money into into real estate. Chinese people come, or whoever, not just Chinese, it could be anyone across the world, is purchasing real estate. And that tends to erode the manufacturing base of the country. Becoming the world's reserve asset sort of requires that. You have to export your currency. And exporting your currency also kind of comes with exporting your manufacturing base as well, which China doesn't really want to do. And Russia's not anywhere near strong enough for that to happen. Right now, the number is 54% of central banking reserves are held in US dollars. So at the moment, and that's been steady for years now. So until we start to see that decrease, and until we really start to see significant portions of global trade back away from the dollar, it's just going to remain king. It's just going to stay there. Like, okay, we'll see. And we have seen it for the last decade or so. Like we've seen slow incremental usage of bilateral trade agreements, especially between Russia and China. But overall in the globe, we don't see a massive move away from the dollar. We don't see a collapse of the dollar. So that's kind of a big macro trend that I see there. Whereas, yes, slowly the dollar is going to become less and less used for global trade, but as a central bank reserve asset, it's probably going to continue that way. Now, in terms, so starting with the dollar, because crypto people like to talk about the dollar and how it's going to collapse, and I don't think that's going to be the case. These people know where their power comes from. They need to keep the bread and circuses, just enough so that they continue with their power base. They get people in the military and in the government, et cetera. But honestly, I don't think that's necessarily the worst thing. Like, okay, yes, I think the monetary system as it exists is a fraud, and we need to do everything we can to replace it, to develop parallel economies. But honestly, if the monetary system collapses, that will mean the suffering and death of a lot of people, probably millions or even billions of people. It's much better if they can keep this ship rolling, right? If they can keep everything going for the next 2 decades while the systems are developed, while the parallel economies are developed. So that's really where I see the macro at the moment. I don't see a huge risk of like systemic events at the moment. I mean, we've seen that potential happen. We saw the banking crisis that happened. But it looks to me, since about September of last year, they've done just enough intervention, a little bit of intervention here, a little bit there, to keep the system from collapsing. And I think the reason is because inflation, has been pretty high, and we're finally on the optimistic end of this, where we might get that inflation back down and things might return to some normalcy. If they allow a systemic crisis to happen like 2008 or 2011, they're going to have to massively intervene and print a bunch of money, or like they did in 2020. And that's going to cause massive inflation again. And they know that they can't do that without, they just can't cause that inflation without really, really pissing off a lot of the voting base and a lot of the people. So in a macro sense, I don't necessarily see major systemic events. That risk will still be there. It's always probably going to be present on our minds because, the system requires ever increasing debt. And if you don't input increasing debt into the system, it'll eventually just have a deflationary spiral. So it's kind of like the system will always eventually collapse. That's always in the cards unless they do some kind of action. But I don't think that right now they really want to let that happen. They might take us to the edge and, take the market on the roller coaster ride, and people will tend to, I don't know. It's like the Fed is an abusive boyfriend and the market is their girlfriend that kind of likes it, And so they take us through these emotional roller coasters, these high highs and then these low lows. And it's just kind of a game in a lot of ways to them. Anyways, so that's kind of where I see the macro on sort of a very long-term basis. I think crypto is just going to continue to get adopted. People, like, we're seeing, I want to say the numbers like 20% of Americans own crypto or have owned crypto now. People understand the value of a bearer asset, especially amidst kind of the somewhat of the awakening we've had of the past few years. I think that's likely to continue. And I think that there's a lot of motivated people, whether it's in Monero or Bitcoin or Ethereum or across the whole crypto sector. I think there's a lot of motivated people that are willing to try and start using crypto in their daily lives. I think there's a good chance we're starting to turn a corner where we might actually see real usage of crypto in the real world for more and more stuff. It's just become easier and easier in my mind to use crypto in ways that are significant and convenient. So in a macro sense, I expect that trend to continue. We're talking years. We'll probably get another big bull market at some point. We could talk maybe a little bit more about how we'll get to that bull market, because right now it feels maybe almost impossible. So yeah, that's kind of my macro view there.
That's actually what I wanted to talk about, is your thesis about how we get to the next bull market.
It seems to me that there needs to be an impetus to create a bull market. And we've seen that through these repeated cycles. People will talk about the halving and how the supply shocks tend to drive these big blow off tops. If you really look through the history of crypto, there has usually been some kind of driving impetus. In a lot of cases, it's been fraud. So for example, if we go back to 2013, there was Mt. Gox, and there were these things called the Willy bots, basically some like market makers or whoever were operating on Mt. Gox. They were allowed to buy Bitcoin with dollars that they didn't actually have, with fiat that wasn't actually in their account. So this drove the price of Bitcoin sky high. That's how we hit that 1170 blow off in November of 2013. And then when that fraud collapsed, price collapsed with it. It looked to me like we had a very long, drawn out bear market. There was sort of an organic bottoming. There was a lot of organic accumulation. I was part of that. And then, towards the end of it, there was probably a little bit of fraud towards the end of it as well that blew us from 10 to 20K almost overnight. So, it's all too much into the details of exactly all the mechanisms of how it's kind of like this mix of organic and, sort of manipulative action behind the scenes. So, anyways, without getting to price, expanded in the previous cycles, it seems to me that the next cycle, and this is a tentative theory, I just kind of arrived at it recently, with all of the attacks that we've seen happening that the SEC has been engaged in. People talk about choke point 2.0. So we've seen the United States government, we've seen bureaucracies try to take down banks that are associated with crypto, trying to choke off the on ramps, the off ramps, and now we've got the SEC attacking Coinbase and Binance, who are like basically the largest exchanges. It does seem like markets hate uncertainty more than anything else, and so this uncertainty, obviously has kind of weighed on price recently. I've been somewhat impressed, to be honest, about how well price has held up here. I still don't think we're in like the real bull market. I think that's another year or two down the line. And I think that the driver for that is going to be some resolution on these cases that are happening. So things have kind of come to a head. The SEC has really like hit their attacks, sent their attack dogs, but now the entire space, the entire crypto industry is starting to coalesce and realize, hey, there's a bully here in our neighborhood and we need to go do something about it. So they're kind of like counter-striking. There's countersuits happening. This is all going to take a year, maybe 2, 3, could even be 4 years to work out. But ultimately, this stuff is going to get worked out, and we're going to see either legislative action that sets regulations that are clear for corporate entities and for, I don't know, I guess the general population. And then we're also going to see regulation that could happen by precedent setting in the courts. So over the course of the next year or so, we're going to see discovery. We're going to see arguments made. We might even see things like summary judgment, where basically arguments have been made, preliminary arguments, the discovery has happened. You know what you're allowed to bring to trial, what you're not. You get a feel for how the judges are thinking in these cases. And then you can apply, you can motion for summary judgment. And right now, for example, Ripple versus the SEC, both sides have motioned for summary judgment on this case, which basically is kind of like the judge saying, okay, we might not need to go to trial. We can decide a bunch of things here and now. We're only going to go to trial for like some limited scope. So I think that it's very possible that either by this time next year or maybe the beginning of 2025, we're going to start to see clarity, even if these trials aren't completely finished. Some of them might be. We might see cases dropped, whatnot. But I think once that regulatory clarity starts to emerge, whether it's legislatively or judicially or both, I think that's going to drive a lot of opportunity from the corporate world. All that institutional adoption that, let's face it, didn't really happen. There was a little bit, but not that much. We're going to see real institutional money and cash coming into the ecosystem. And confirmations of this theory, we'll see things like, for example, BlackRock trying to file for their trust. I don't think that's necessarily a big deal now, although people, they want it to be a big deal now, because who doesn't want some number go up gains, right? But it's not a big deal now because the Grayscale Bitcoin Investment Trust is already trading at like minus 40% to its net asset value. So basically Grayscale released, they basically created a trust where they buy Bitcoin for institutional players, and then they give them like this token, that not token, but like an ETN that they can trade on the NASDAQ. They're not allowed to sell Bitcoin out of that trust. So they have a certain amount of Bitcoin in the trust, and that's valued at a certain level on the based on the price of Bitcoin. However, what it trades, what their ticker trades on the NASDAQ is right now trading 40% below the net asset value of Grayscale Bitcoin Trust. This was one of the big things back in 2021 that I said, listen, there is not institutional FOMO right now. That's not happening because we were already like negative 20% the NASDAQ was trading the Bitcoin Investment Grayscale Trust minus 20%. So if there was institutional FOMO, these guys would be like scooping up 40% off Bitcoin, but they're not. So at the moment, I don't think that the BlackRock trust matters that much, but it could matter in going into the future. The big difference between them and Grayscale is that they're going to have the ability to sell Bitcoin out of their trust, whereas Grayscale right now doesn't do that. So they'll be able to actually accurately peg their price. So yeah, I think that's what could potentially is most likely going to drive the next bull market. I do have some suspicions that this might just kind of be a big theater. Like, it's very possible that what's happening right now, a choke point 2.0 and all the SEC attacks, this could just be like a big theater. That whole roller coaster, the abusive boyfriend and the girlfriend that is going along with it or whatever, where the SEC is basically like launching these attacks to create like the fear and the panic in the market that eventually will get resolved. And once that happens, the market will be like, oh my God, it's so great. We made up and now we're going to go to new heights. And I wonder, because Gensler in the past has expressed like he was a professor at MIT, and he expressed he said 3/4 of all cryptos are not securities. And then he made some good statements about Algorand as well. So it's like, okay, now he says they're all securities except for Bitcoin. And he won't even get up in front of Congress and say that Ethereum's not a security, even though the CFTC says it's not. So I do wonder if he's like playing a role. That's totally speculative, but we do know that like politicians, at least in my mind, politicians and insiders, they do often play these games. They get up, they grandstand, they debate, they hate each other, but then they're buddies back in the locker room or whatever.
So do you think there's a bull run happening without regulatory clarity?
Maybe a small one, but it would be muted. Like whatever potential it has will be significantly magnified with regulatory clarity.
Why is that?
One thing, like, so markets hate uncertainty more than anything, and corporations and financial institutions especially hate uncertainty.
True.
So these guys, a lot of them, I suspect that a lot of them would like to play in crypto. We do see things like, so another theory I have is that in order to prevent crypto from getting too big as like a medium of exchange, we see all these stable coins. Like, for example, BlackRock has USDC. It's backed by US treasuries. They issue it on top of Ethereum. My guess is that Ethereum layer 2 and just in general, Ethereum virtual machines. So like Tron, for example, we're going to see a lot of layer 2 activity starting to happen there, roll-ups, where we're going to see USDC, USDT, these stable coins that are already used. Like if you go to other parts of the world, you'll see that stable coins are often used as money in a lot of places. I think that the cabal would love to sort of do a backdoor CBDC via stablecoins on layer 2 that are backed by U.S. treasuries. And I do find it, I don't want to be too much of a hater here on the podcast, but I do find it ironic that maximalists often, they seem to love Tether. They seem to really have kind of a chummy relationship with Tether. And they're like, well, they're not that bad and whatever. Okay. Meanwhile, it seems like Tether is almost used more as a currency than Bitcoin itself. So anyways, I do think that there's kind of like an end around that could happen there. And I think that, I mean, there are big institutions that would love to move some of these financial products, like some of the big, like some of the larger financial functions. I think they'd ultimately love to move that onto a distributed ledger, but you can't just like go and do that, in year 10 or year 13 of its existence. I think a lot of these bull runs are stress testing of these systems. So for example, 2021 was kind of like the first stress test of sort of the Ethereum ecosystem and some of these like DeFi stuff. And it does seem like you're playing finance. Like we look at this and we're like, yeah, this is all dumb. Like this doesn't make any sense. You're not doing anything, but you kind of have to play finance. You have to pretend finance and stress test that system before you could ever really move any functions onto it that might be critical for, larger financial infrastructure. I do see a lot of investment, BlackRock is they're one of the largest financial firms in the entire world. And they've got USDC, and now they're going to have this Bitcoin ETF. They'll probably have an Ethereum ETF. We're not sure. So there's been some debate over whether it's a trust or an ETF. Their paperwork says it's a trust. It's maybe kind of splitting hairs a little bit, but we'll have to see. I mean, it would be unsurprising if they got approved for a straight up ETF. But anyways, it just seems to me like institutions do want to come in and play, but the rules just aren't there. And America is still the financial center of the world. So if regulatory clarity doesn't exist in America, it's going to be hard to get the rest of the world onboarded to crypto. So I think we'll see these institutions get involved if and when we get just a clearer landscape on the rules that they have to abide by.
Bawdy, thanks so much for coming on, man. Honestly, you're full of great information. Where can people find you if they want to find out more information?
So I spend most of my time these days on social media on Twitter. So I'm at Bawdy Anarchist with an underscore at the end. So that's usually where I hang out. You can find me on Reddit sometimes, but
we'll link it all in the description. Thanks so much for coming on, man.